Hello, my dear friends. Update to the fantastic Trololo chart. This was the previous version that I published. It's just a Photoshop edit because Troll is not there. I am working with someone else there on a new chart that also has a YouTube channel. I will link it below. But um, but for the time being, I'm just editing this one because it still works, and actually nothing has changed. This red trend line is still accurate, even though this one was drawn with data up until almost a year ago, but it's still accurate because the new data hasn't changed much. This is the updated chart, this one. Huh? So this was the old one. I made some serious mistakes here actually with the blue line. I have now updated that with some big adjustments. So before, like half a year ago, we had just gone over we had had a huge rally from about 100 billion to about, how much was it? 400 billion total market cap. I have to check. Can't read that difficult here because it's logarithmic. When you're at half, it's about 300 billion total market cap, and then we went down. But how deep would we go? We didn't know. We went back under the trend line, but I expected we would make a new high in undervaluation, which we did just a couple weeks ago. Huh? So you see, we're at minus 22%, but a couple of weeks ago we went to minus 52%, where I also recommended to buy and bought myself and went back to a majority crypto exposure. This was likely to happen, and it was likely to happen at a higher fiat valuation than the bottom, which indeed panned out because the bottom was 100 billion, but this new high in undervaluation was reached actually at around 175 billion or so. This is still the end of the year, where it was just a week ago, where it was 190 billion, but the low was 175 billion. This is Photoshop. The numbers are not absolutely correct here. Actually, it's not correct because this minus 52% undervaluation was reached at about 180 billion, not 190 billion. But this is a big picture video, and this is the most important. And um, so so this is what happened. But of course, to try to estimate what the future will bring, this blue line is very important. The red line is, of course, very important, and but the blue line is the end result of all information, what I expect to happen. And you see a very big difference between my previous blue line and the new blue line. It's a very big difference. So why did it change so much? Well, because of things I learned in the meantime, the past half year. First of all, the red line here, still thought at the time this is an average price for the future. This was totally wrong. Actually, the red line turns out to be in the next cycle not an average price, but a top valuation. Huh? See my other video there, why Bitcoin will likely go down. I show that there. Why? Huh? But this has always been the case in past cycles. Whenever you draw the red trend line after a full cycle, after a bull and bear has played out, which was the case here, this red line always ends up being a top valuation. So the previous red line, for example, after previous cycle, when you were here, that was not drawn like this. Actually, the previous red line was drawn like this. But then a lot of new information comes in here. For starting this point, a lot of new information comes in, which will drag this red line down. And the red line, by the time you're here, this red line has been pulled down completely from here till here. And so, but if you want to here predict the future, you see the red line go like this. Well, likely the top valuation will be there. This is true also today. The red line with today's information does not show an average price for the future, but a top valuation for the next cycle. So this blue line cannot go above the red line. it has to stay below. There's also an estimation how when will the next cycle be, and for that, one moment. I also took another look. This is the crypto investment plan I also share. Here you have the second tab, you have the plan, the first tab. The second tab is estimation of cycles based on previous cycles. So we saw a pattern break. I thought that when we were at the top in 2017, that likely the next bear cycle would take, since the bull cycle took 3 years, it would take 1.5 years. But I don't think, I think the facts show different today. I think it's very likely the bottom was in December 2018 at about $100 billion and about $3,000 for Bitcoin Cash, Bitcoin Core. That means that the bear market took only 1 year, and that's also logical because actually bear markets here they take half the time of a bull market. But as if you look at the stock market, that's not the case. Bear markets don't take half the time of a bull market. Mm, um, like over time, bear markets become shorter because the shakeout goes quicker. Um, so and also there's more confidence in the market being built up over time. So that's also why bear markets become shorter. Um, uh, but the question is, how long will the next bull market look? Based on all the information we have here, and I just extrapolated it. Um, like there is a pattern break in the bear markets, but up until now, previous bull markets have always shown a clear pattern of taking longer and longer, whereas this bear market took equally long. But the bull markets always take longer and longer, which is logical as it takes more time to, if you are in higher market caps, for a bull market to play out. And so here you see that the bull market took 100% longer than the previous cycle. Here you see that the bull market took 3 years, as 50% longer as the previous cycle. So if you extrapolate that, you see that growth rates get cut in half. So the next bull cycle will most likely, but not certain, just most likely, this is just estimating probabilities here, everything will take about half the previous growth rate. So it would take 25% longer as a previous bull market. That means it's not 3 years, but 3.8 years. And that means that's about 3 years and 10 months. And that means that counting from the bottom, which was in December 2018, 1 year after the top, plus 3 years and 10 months, you end up with an estimation of the top around the end of 2022, but not in December, in October. As by my best guess, this changed also a little bit because before it was at the end of 22 in December. So it's 2 months earlier now, a small detail. So first of all, this blue line needs to stay below the red line. It also needs to be pulled to the front because it's the middle of this is in 2023. In the middle of 2023, I now think a more accurate estimate is that it is actually in 2022 at the end of the year. So that means it will end up here, the blue line, which also is in my new chart the case. The blue line ends up here. This is my estimation for the next top, a little bit higher, because this blue line needs to represent the average prices. So it will hit about 3 trillion here. This is also what I have in the investment plan. The estimation for the next top is about 3 trillion. A small chance we go a little bit higher, but most likely we go about here. And by that time, the red line will not be here anymore, because a lot of price data will come in that will be about here, and it will pull down the red line. So that's one thing. But you see also a big difference between the previous blue line here, the bull bear cycle, and the new one, is that it doesn't go as high, but it also doesn't go as low. Look, previously I was drawing it like this because I thought then that actually the bottom was not in. Um, and that because it was only 1 year and I expected to be 1 year and a half, and I hadn't seen some other data that, so I was still convinced that this was not the bottom. And so that's a big difference, because now I am. But there's also another big difference. Here I thought that we can expect new highs in undervaluation over time. And I've changed my mind on that. So I thought it was most likely that, yes, here we see like from about 40% undervaluation to about 60% undervaluation. Here's about 40% undervaluation to about, this was about 55. This was a 70. So from the here it went to about 60% undervaluation. Here it went to about 70% undervaluation. So I thought for the next cycle, we will most likely see about 70 to 80% undervaluation, which means that this green line here will be breached. So in the bear market of 2011, it was never breached. In the bear market of 2014-15, it went below it. But in the bear market of 2018-19, I expected, and the new bull market, because actually the bear market always stops here, stops here. This is a bull market. In the new bull market, in the early phase of the new bull market, the green line was not breached, but here it was. And then here I expected it to be breached even more because we would have higher high in undervaluation compared to the red line. The white line would get further and further. That's why I drew it like this, because logically patterns are most likely to continue. But we have new information since then, and actually that was already the case here, but I didn't see the light, so to speak, yet. I was still convinced here that this was a manipulated rally that really is out of line and makes no sense, and and it will all tumble and tumble very deep. And I thought that it would go to even not 100 billion but maybe even 80 billion or so. But I've changed my mind here, and I don't think that's the case. I think this rally, well, it's just what it is. It's a very strong rally, and it's very bullish. Nobody saw it coming, and I mean, at this point, nobody saw it coming. Here, everybody sees it coming, and here everybody hopes it comes, but it doesn't. It goes first like this. But it did happen, and it's very bullish. So like, this is a very different pattern than what we saw here, but we can see that actually it's a very similar pattern than what we saw in the bear market and the early bull market of 2011, where it also went below and back above and back below. This is also what we saw now. We went below, back above, and back below, and we did make a new high undervaluation, just like in 2011. So I think we have to look at the 2011 scenario to make more sense of this. And also, that means that very likely, yes, we will see new highs in undervaluation. We saw one. In 2011, we saw another one. We can expect another one and even more, I think, instead of, because like one, two, so one, two, three, new highs in undervaluation. Here you have like, it basically like, it's more like not a three but a four move. It took also longer here. So I think we can still expect this to take a lot of time to be under the trend line here. I think we can expect to make a new high in undervaluation again, but that does not mean a new fiat low, certainly not at all. And that doesn't even mean lower fiat prices as today. It just means that, well, the way I drew the line, that yes, you can see here that the distance is about 50% from the red line. Here we made a new high. This was about, let's say, 45. This is about 55. We just saw that. But here we can make an even bigger distance between the red line and the white line. But I don't think it's likely that we will go below the green line, because that would mean we make higher highs in undervaluation, even higher than the previous bear market. I don't think that's likely anymore because it's so bullish what we just saw. So I think we have to look at this here and we will stay above the green line. That's why I changed this blue line so much, where I thought it would go below the green line, and now I think it will stay above the green line. And that's an average price. The white line will go around it. So it's a big change because it also it also means that I will have to adjust my expectations for the future. Like I really thought it was still likely, as I just said in my previous video, that the bottom would be tested for Bitcoin Core around 4,000. Like I gave that a 55% chance, but I think I will have to adjust that just based on this blue line. That's going to become very difficult because this was 100 billion. If we would go to 4,000 um, Bitcoin Core, that means that we would have to go to about 125 billion. But 4,000 Bitcoin Core, total market cap 125 billion. But if we would do that to go to 125 billion, that means that we would breach the green line. And that means that because now we're at 200 billion about, to go to 125 billion, that's here. That's clearly below the green line. That means that that means that's a 2013 scenario. Sorry, 14, 15 scenario, just like here. Actually, it would be even worse than here. So we would go indeed to a minus 80% undervaluation to be able to achieve that if it would be over the next month. But even if it would be achieved here, like, no, sorry. But so I think that that's going to become difficult. So this is what I think we can most likely expect. And you see the white line, that's the actual prices. I mean, it's a guess, but it gives an idea because, and you see a big difference here. The lines is very steep. How these bull bear cycles go. It's much more flat now, but that makes sense because, for example, if you look at the last phase here, the white line here we're testing the high here of about 800 billion total market cap, 800 billion. But once we break it, we go this small line represents actually going from 800 billion to 3 trillion. That's a huge rally that will be worldwide news again, and it's only happening in half year's time. Um, that's tremendous, and everybody will be happy again here, even though it doesn't look that much higher as this point. Actually, on a logarithmic chart, this does make a huge difference. It's going from basically 800 billion, the previous high, to 3 trillion. Um, and before I just hadn't studied so much in depth. Before I said that, okay, so with this new information, since we only go to 3 trillion, we need to check out a lot of bullishness. But because it means for Bitcoin Core, for example, where so many people are still very bullish on, it means if we have a high of 3 trillion, it means for Bitcoin Core, that's a disaster. We will not even breach the old all-time high. If indeed it continues to lose market share as it did in previous cycles, which I still think is likely because today the facts still show that. Today it peaked out at 70% market share Bitcoin Core, but that's a lot lower than the previous cycle where it topped out at about 90% or so. Now it was only 70% in the early bull cycle I'm talking about here. So But yeah, that's very bearish, I would say, for Bitcoin Core, and that means that we do have to go lower and we do have to test the bottom. But yeah, that may all be true. But in the meantime, other coins can really pump a lot. And I think that's going to be the year of 2020 that we see other coins like Ethereum. And I mentioned Ripple. I don't never say Ripple. I think it's even questionable to be a cryptocurrency, but it has been part of the cryptocurrency world and has always pumped quite spectacular in the early phase of a bull market. Mm. And and so the bigger coins may pump a lot, and so this is always a chart about total market cap, not about Bitcoin, huh? But if you look, for example, at what could happen here, huh? Like I think this is well done because you see here always a new high in undervaluation actually, huh? Because it always comes closer to the green line, huh? And so, for example, what could happen today? Well, I think today it's likely we're gonna pump because we just set a new high in undervaluation. I mean, we can't go much deeper. That would be weird. That would not be in line of the 2011 scenario, huh? Where we make new highs in undervaluation, but in between you always have a pump. Huh? Well, we just had a new high in undervaluation. Actually, it just started pumping quite strong from about 175 billion to low. We are already at 210 billion in 2 weeks or so. But I think a pump is likely here. But at the same time, I think doubt needs to remain in the market, huh? Because yeah. To go to if it's only expected to be 3 trillion here, we can't go here this year in 2020 up like we can't go even close to 800 billion anytime soon, huh? So in order to create doubt in the market, we can't set like beautiful higher highs every time and higher lows every time, huh? Because that's too bullish. That would create a bull market too soon. So I think, for example, we could pump now but not make a new high, huh? Before we correct. And so we went to about 300-400 billion here, to about was it 400 billion, 500 billion? Let me check. Yeah, so here we see that it was about 300 billion actually, not 400. Huh? So that was the top 300 billion. So I think we could go, for example, from the current 200 billion we are today to not 300 billion, it's 330 billion, but for example, from 200 billion to 250 billion, huh? Or 260, 280 billion, not above the 330 billion here. And it could happen by, for example, Ethereum or Bitcoin Cash or Ripple pumping while Bitcoin Core is just going up slowly and certainly not having a strong rally like it had here, huh? But maybe just going sideways. Why while it's only some other bigger coins that pump? That's possible, huh? That's actually expected in the second phase of the bull market, huh? And so, yes, the total market cap goes up to about 250, 260 billion, but it's due to some other coins than Bitcoin Core, which would create doubt in the market, huh? And then after that, a correction, huh? Maybe it's Bitcoin Core being difficult again, huh? And going down again, maybe back to current valuations, huh? Maybe it goes from 7,000 to 8,000, 9,000 over the next half year, then it goes back to 7,000 here. And then, of course, some those bigger coins that have pumped also do a correction. So we go maybe from 250 billion to not 200 billion. Sorry, to not 170 billion, but maybe we make a low here of about from 260 billion to about 200 billion. Well, it's all not spectacular. It creates some doubt also because we have a higher low. That's weird. But we do make a higher high here after it goes back up, which is bullish. Huh? And because that happens, we have a much stronger rally here. This is also only in about like by the end of 2020 that we get started into a a bigger rally. And where do we end the year in 2020? Well, not at 200 billion, but at 400 billion, 500 billion. Huh? And that would be a great year. Crypto doubled again. Then everybody becomes confident like, okay, actually, we are in a bull market. People will only realize that in about 1 year. Um, but we haven't breached the old all-time high. There is still some doubt. And indeed, when we reach the old all-time high, we have a lot of selling around 800 billion because, well, many people have had some very hard times here over the past few years and are very happy they see the prices finally back that they've bought in at around 600 billion, 700 billion, 800 billion in the previous bubble. And are selling. Huh? So that causes a strong correction, very similar to the strong correction here, huh? And the strong correction here, if you remember, in the middle of the strong bull market. Huh? Um, but but most importantly, it sets for the last time a new high in undervaluation. Huh? And that's only expected then in about 1 year and a half from here in the middle of 2021. A new high in undervaluation, but what is the actual fiat value? Well, it's about 300, 400 billion. Huh? That we go back again. After trying to breach 800 billion, we go back to 400 billion. And this actually is the will be the because you always see at the end of the early bull market, not always, but here you have an outlier, but you see a downwards trend. So at the end of the sideways movement, you could say you see the highest high in undervaluation, which actually hits for the first time the green line here, but it's only hitting, not breaching. And after that, we go back up. We test again the top of 800 billion, and then we breach it. And once we breach the old all-time high, of course, all bets are off, and it's extremely bullish, and everybody jumps in, and we go from about 800 billion here to about 3 trillion. I think that's the most probable scenario. But when it comes to individual coins, it's going to make a huge difference, I believe. Um, just extrapolating the loss of market share for Bitcoin Core, which I did here, means that, well, in the previous top, Bitcoin Core, the previous top actually it dropped to about 33% market share that Bitcoin Core only had left. Um, in the top before, actually in 2013, Bitcoin Core still had 80% market share. And the top before in 2011 had almost 100% market share. So you see that every top, it loses a lot of market share. Of course, at the top, the small coins pump also the most, so that's why that happens. But at the same time, you see a huge pattern break here between 2013 top and 2017 top. Like it lost way too much market share here, and we all know why. I've talked a lot about it. The fundamentals of Bitcoin Core has changed a lot. It's actually not Bitcoin. It doesn't work anymore like Bitcoin used to work because they changed the rules, and now you have high transaction fees, and you have a shortage of bandwidth of block space, and you have to pay a lot of money to get into it. And so, of course, it's going to cause a lot of people to run to other coins, and that's why we saw a lot of adoption, real adoption, utility adoption, but also a lot of more speculation, a lot of more value appreciation in other coins in the previous bull market, and that's why Bitcoin Core lost so much market share. But I expect this pattern to continue because the fundamentals haven't changed. It's still the same story today. It's not like Bitcoin Core changed their tune and said like, "Okay, guys, sorry, we're wrong," or even like, "Yeah, we do need some more block size space. We double it to 2 MB or 3 MB," and suddenly you have like cheap transactions on chain again. Okay, that changes the story, but that's not the case. Like they are still continuing the same path of really making it a scarce a resource, the Bitcoin BTC blockchain. And so I think the pattern will just continue. And what does that mean? In the next top, how much market share will Bitcoin Core have? Well, I just extrapolated it, and it means it's not 33%, it's 16%. Huh? It's cut in half again. Huh? It was cut in half here, more than half. It's cut in half here again. Huh? So at the next peak, when we are around 3 trillion, Bitcoin Core will peak out about 16% market share. What does that mean? It means that the total value of Bitcoin will be about 600 billion. Huh? And that means that's $30,000 per coin. This, I think, will be the big shocker, huh? Because not for the market that's not informed. They're like, oh, there's the big boom, big boom. Oh, and Bitcoin also made a new high. Just the previous high was $20,000. Oh, we're at $30,000. Wow. But the party is over there, and actually, the real gains were somewhere else. Ethereum here. That I gave, like, it doesn't lose any market share. It also doesn't win market share compared to the previous top here. It had also 16% market share. Bitcoin Cash at 70% market share at the previous tops. My estimation is that they will not gain market share because that's really not. That's extremely difficult in a booming market where you have a lot of new players coming onto the market. However, it will happen likely in a bear market thereafter, but that's for later. But I estimate, and that's optimistic estimation, that they keep their market share, both of them. And if they succeed in that, well, that means that's like, that means that Ethereum will finally, at the end and at the top, become more valuable than Bitcoin Core. I also think it's a very realistic scenario. Huh? Like I actually thought it would happen in the previous boom, but yeah, that was a little too early. In the previous boom, Ethereum topped out at half the value of Bitcoin Core, but I think in the next boom it will top out just a little higher, and that's really also news that will be disappointing for all these Bitcoin Core supporters, realizing that actually now Ethereum is bigger at the end of the next bull market, and while also realizing that they should have picked Ethereum because the gains are much higher there, than in Bitcoin Core. Huh? And I think Bitcoin Cash, of course, there are a lot of things that can go wrong, but I think Bitcoin Cash will just do well. Huh? Just for the most part, thanks to the failure of Bitcoin Core, and keeping like just attracting people that really want to use crypto as a payment system and want cheap transactions, and yeah, they will gravitate to that. And I think also like the big investors will also start to catch up to start, because today the big investors that invest also in crypto but also in other markets, they are not really yet aware of this story. They still believe in Bitcoin Core strongly. But as the bull market progresses and they see strong pumps in Ethereum and Bitcoin Cash, they will study it more and also start to see the problems, and probably also start to invest in these coins here a lot more. And that will basically also cause these flippenings. Huh? Um, so yeah, that's what I think is most likely to happen. But I think I will have to adjust this. I think I'm wrong in this estimation. I think I don't think it's likely anymore we will go to 4K. I have to study it more, how much probabilities I give it. But my justification before was that if you look at here testing bottom, well, we always tested the bottom. That's true. In 2012, 2011, it was 100% higher. The low was $2, and then we tested it at $4. That's 100% higher. That's this point here. And we went from here from $30 to $2. We went to $8 and then to $4. This was testing the bottom, a lot higher than the low, but it was a test of the bottom. I mean, that was the lowest it went before it went a lot higher. So testing the bottom was 100% higher. But here it was like a lot lower. Like here was the bottom, but you see it really goes sideways in fiat value, and so it was. Let me check. The bottom was under 55, and we 1 year later we went back to 200. So that was 30% higher. That's why I said, okay, we are 100% higher the first cycle, 30% higher the next cycle. And since growth is going down over time, likely we will see testing the bottom about 10% higher. But, and that would mean 4,000. Huh? So that's why I give 55% to see 4,000. But yeah, if you look at the chart here, like actually 20, this is very bullish. 2011 is the most likely scenario, not 2013, 14. And so that means that actually, yeah, here the low was 100% higher. Well, it could be the same today. Huh? The low can be indeed 100% higher. We just saw that. We went for 3,000 was the low. We just went to 6,000 or 3,150. We just went to 6,500. That's 100% higher, which that could have been testing the bottom today. Huh? We could have just tested the bottom. Huh? And then still all the same is respected. It still means yes, growth is going down over time a lot. Huh? It can really play out like this. Huh? A slow rise, just like here also. But it's just we skip this phase here. It's more like 2011 here. Yes, it's a slow rise. It's a slow rise. We stay below the fair value. We went above shortly, but we stay below the whole time. But yeah, we really don't have to go lower actually. Um, so I will have to adjust that. And yeah, if you haven't bought crypto yet to a majority allocation, like, I really think you should reconsider. Yeah, because I'm starting to think actually like yeah, I'm gonna have to lower this, huh? I don't know how much, huh? But this changes my probability estimates. I hope you enjoyed it. Please let me know your feedback in the comments. I really appreciate it. Huh? If you think I overlooked something, let me know. And thanks so much for watching. Have a great day.